President Trump has announced a trade deal with one of the U.S.'s largest trading partners, Japan, which includes lowering tariffs to 15%.
Mr. Trump touts this as a massive deal and perhaps the biggest agreement ever made. He says the Asian ally will open up trade, including autos, rice, and other agricultural products. Mr. Trump added that Japan will invest $550 billion into America.
The U.S. leader reportedly met yesterday with Japan's top tariff negotiator, Ryosei Akazawa, who sought to avert 25% tariffs set in a letter sent to Japan earlier this month. And for the very latest, we're joined by Michio Ishida, who is in Tokyo. Michio, so what's been Japan's response to the 15% tariff rate set by President Trump so far this morning?
Well, Prime Minister Shigeru Ishiba actually spoke to reporters this morning, and Mr. Ishiba said that he has been notified by his economic revitalization minister, Mr. Ryosei Akazawa, who's his chief trade negotiator, that he had met with Commerce Secretary Howard Lutnick, Treasury Secretary Scott Bessent, and with President Donald Trump. Now, Mr. Ishiba said he has not received the latest details from Mr. Akazawa yet, but what he can say at this point in time is negotiation with the U.S. started in February. It was about defending each other's sovereignty. And going forward, Japan and the U.S. will work together, create jobs, create good products. He said the two countries will be able to contribute to this world.
And Michio, exactly how beneficial is this deal for Japan?
Well, Mr. Shigeru Ishiba has been saying all along that the deal with the U.S. had to be a win-win for both countries. Japan's been the biggest foreign investor for the U.S. He wanted the U.S. to leverage on that to cut down on its trade deficit with Japan. Now, important in particular to Mr. Ishiba and for the Japan economy is to save Japan's auto sector. It's the most important sector for Japan, and 1/4 of Japanese exports to the U.S. have been vehicles. In April, U.S. tariffs on Japanese cars rose to 25%. Impact has been immediate. May and June figures show Japan's car exports to the U.S. fell. Although not yet official, Japanese media say there are government sources stating that tariffs on cars has been lowered this time to 15%. That's in the latest negotiation. And if all these are true, it's actually an achievement on the part of Prime Minister Ishiba and Minister Akazawa, even though they lost the latest upper house election.
All right, Michio, thank you very much for that update. Michio Ishida live there from Tokyo. And for more, we're joined by Deborah Elms, Head of Trade Policy at the Hinrich Foundation. Deborah, good morning. Appreciate you joining us at short notice. Let's start with the numbers, 15% versus 25%. We're hearing the Japanese media apparently caught a little bit off guard, but not in an unpleasant way. So is it a win-win? Is it a good deal to you at first glance?
Well, I think we need to see a lot more details because the question is what was covered and what was excluded. And crucially for Japan, 15% is certainly better than 25%. But remember that U.S. tariffs were roughly 2% heading into April. So, this is a significant escalation in tariffs overall. And especially for Japan and other industrialized economies, what matters is not just this reciprocal rate of 15% or whatever it is, but also what is happening on all of these sector-specific tariffs that include cars, metals, semiconductors ahead, pharmaceuticals ahead, et cetera, where Japan is extremely competitive. Those will ultimately matter more, I think, than whatever this reciprocal rate is as we head forward in time.
Deborah, I'm not sure if you heard Michio earlier on. She mentioned that it is possible that the 15% applies to Japan's automakers as well. How important is that going to be, that it's actually 15% and doesn't stay at 25%, which we know applies to all foreign-made cars going into the U.S. at this time?
Well, I think that clearly will be important for Japan, and that does give them a competitive advantage compared to other foreign investors, other foreign producers of automobiles that are shipped to the United States. Clearly, that is important, but that's not the only challenge for Japan. You know, many of the vehicles that Japan manufactures for the United States market are made in the U.S., and so what matters to them is also auto parts tariffs, and crucially, things like metals, so steel, aluminum, and all of the derivatives. If those are up by 25%, then your domestic production or 50% actually on metals, your domestic production in the United States is also disadvantaged. And so I think you have to remember that this is a series of moving parts, and you're trying to think about all the ways that the pieces come together to create either easier or more restrictive trade environment for Japan, Japanese companies, and U.S. companies looking to continue to export to Japan.
So, Deborah, President Trump says that Japan will invest $550 billion in the U.S. and hopes to keep 90% of the profits from these ventures. Can you tell us how this might work and also how this deal could create hundreds of thousands of jobs, as he says? How do you see all this panning out?
I think we need to see the details on that one. I mean, he also declared that this is the biggest trade deal ever, and I would suggest it is not. No matter what is in this agreement, the deal with the United States has had with Canada and Mexico is a far larger agreement than anything that the U.S. and Japan are likely to have accomplished. So I think, as always with Trump, you have to take his pronouncements with a very, very heavy dose of salt and see what the details are at the end of this. And I'm sure that if Trump, in fact, managed to get $500 million of investment or more and keep 90% of the profits, everyone around the planet is going to be looking for how that was done, because they would like to replicate the same conditions. To keep 90% of anyone else's profits is quite remarkable. We'll see what happens when you see the details.
So Deborah, based on the so-called agreement signed so far with the likes of Vietnam, with Indonesia, and also the Philippines, apparently, the United States is going to have full access, tariff-free, into the three countries I mentioned. But apparently for Japan, it's sectoral access, not full access to sensitive Japanese areas. I think you mentioned some of them, including the auto sector, rice, agriculture as well. Again, I want to ask you, how important is this for the Japanese economy and the local sectors, but also, I guess, for the Prime Minister, who's I guess, under a bit of political pressure at this time?
Well, first of all, let me back up and say, again, nothing's been signed. So these are announcements that are made by tweet. We don't know what the details are with any of these economies. And those that have been done earlier, like with Vietnam and now with Indonesia, we still don't have the details. Vietnam was officially concluded a few weeks ago, no details, and a lot of arguments behind the scenes still over what was actually agreed. Particularly what was agreed on how much market opening are these economies going to give the United States. Trump says full access at zero tariffs. That was apparently not what was agreed with Vietnam, with Indonesia, probably with the Philippines, and my guess is with Japan. So again, it's great to pretend that Trump is giving you the completely accurate description of these agreements. But until we see what actually was on the table and where we stand, I think we should be very skeptical about these sweeping promises. And we can't really put numbers, for example, on how large the benefit might be, what the benefit might be, or the damage to the domestic economies until we see more of these details. It's one thing to treat this all as a great game of entertainment, which I know is how many folks in the media and perhaps the listening public likes to think of it. But these are real people's jobs that are on the line here, right? So if you have a tariff that is high or a tariff that is low, that affects how many domestic jobs you have. That affects whether people can actually feed their children. So I think we need to be careful about treating an announcement by tweet as if it was an actual document. And we need to remember that there are real consequences to whatever was agreed to. This is not actually a game. This is real.
And are you able to see any more clarity on that note, on how these tariffs have been calculated so far with the deals that seem to be firmed up? The Japan one was just struck with a weakened Ishiba government. The Filipino one reduced marginally, and they're a big ally. Indonesia and Vietnamese with greater deficit disparity. So if you're in the discussion queue, what can you glean from all of this, especially in terms of balance?
Well, I think the key is that it's very fluid, and the situation, as one might expect, is likely to change. It could change overnight. It could catch you completely off guard. There could be an announcement made via tweet that you either were or weren't expecting that either does or doesn't include information that you had talked about. And so you need to be happy that you are not getting a worse situation. I think that's delightful. But you also need to be very cautious about how a tweet could end up locking you into a position that you actually didn't think you were in, and then how that gets unwound in the future. And as with everything Trump related, whatever agreement you think you may have could be subject to change without notice at any time. And so, this is obviously, it's better to have a deal than to not, perhaps. It might be better to have a lower number than a higher number, but those numbers are likely to be back in the headlines again and again and again for as long as Trump remains in the White House. He loves tariffs. He will continue to use them whenever he feels threatened, cornered, when he would like to turn the attention back to him. So any deal announced via tweet is not likely to be stable.
It's good to hear from you. Thank you so much, Deborah Elms, Head of Trade Policy at Hinrich Foundation.